Happy midweek, everyone. Happy Wednesday. So, welcome to our viewers, first of all. You know what to do. Don't forget to click the follow button for the stay tuned for our next upcoming Crowdcast news and events. Also, we did prepare you this time 4 questions in the polls. You can see them on the left side of the chat to understand the crowd better. Make sure you pick an answer. Now, who are we? You already know me and Mario, but we have today on the studio Tim Kading, CEO and founder of Crypto Studio. Hi.
Hi.
And Lucas Hofer, founding partner of Crypto Studio as well. So before
Hello.
we dig in, I will pass the mic to Mario. Like I said, please don't forget to pick an answer for the polls.
Yes, thanks, Era, and hi, Tim and Lucas. Tim, great to have you back. Right, after our last session, maybe for the other listeners who are not aware, we had a previous session that was about lending and staking, and more of a panel. You should absolutely check it out if you're into the topic. But yes, we got so much interest from the crowd that we said, okay, we need to have a follow-on event that is dedicated solely to lending. And this is where we are right now. So thanks for joining again, Tim, and bringing on Lucas to gain some more insights from both of you about the space. Before we dive into questions and what you guys do and everything, we have our little exercise in the beginning that is about sharing a fact about oneself, right? Because it's more and more important in a digital formats to connect also on different, not only topics. So one fun fact about each one of us for the audience to get a little bit a different puzzle piece. Happy to start with my fun fact for today, and it gets more and more difficult to come up with one, is I'm currently sitting in Skopje, North Macedonia, which crypto-related topic are looking more and more into how to create a regulatory environment that is crypto-friendly. So maybe Tim.
Yeah, I was told I cannot say the same. I already was sharing last time, even though it was a good one. So check out the last episode. So I have to make it short. I would say I can wiggle my ears, but don't ask me to do it now. Yeah.
No, we wouldn't want the AirPods to fall out.
That's a good one.
Yeah.
Okay, Era, what about you?
All right. For me, I don't like the color of yellow. I don't know. It's just pop on my question.
Interesting. Interesting
You're
choice.
welcome for the information.
And finally, Lucas.
Let's continue.
Yeah. So when you look at the Crypto Studio team, what's interesting is that I'm sort of like the only banker on there, the only person with a real finance background. Most of the other guys are either having a tech background or, like Tim, a startup background, and probably because of that, I'm much more conservative when it comes to like investing in single crypto assets. I invest more mostly in stocks, like diversified index funds and that kind of stuff. So as you can imagine, over the last 1.5 years, everyone else has outperformed me like by far, even though I'm supposed to be the investment expert. But okay, let's see. The jury is still out on that. We'll have to reassess that maybe in 10 years' time.
Yes, that's thanks for sharing. It's a very good point to say right now to our listeners. We're talking about lending, we're talking about financials, but this is not financial advice. Right. So do your own research. This is just for informational purposes only. And that being said, I want to let you know what you can expect from the next, now probably 40 minutes left. We're going to have a trilogy of kind of topics or blocks. One is an introduction to lending, and please let us know what your experience is with the polls. Then potential challenges or risks attached to the space, and then moving into the opportunities that it provides. Right? So this is more or less the structure. As always, we will go with the flow, and always please ask questions if you have any, and we either sprinkle them in right away if it fits, or otherwise come back to them in the end of the crowdcast. So just short introduction, so we have it kind of set in a concise manner. What is Crypto Studio, and yes, what is it all about?
Maybe a few sentences to Crypto Studio itself. So basically, we try to empower everyone to make informed decisions in crypto markets, and of course, we are focused on lending. But basically, we try to build an independent comparison and knowledge hub, I would say. We provide, on one hand, educational content. On the other side, we provide decision-making tools. Not all of them you can see already, but they will be in live soon. And basically, lending is the topic where we started with, because we think it's the most important topic, and maybe also the most inclusive. But maybe we explain later why we think so. So that's basically the keywords here.
Okay, great. Thanks. Maybe Lucas, something to add from your perspective, and maybe also interesting how you let the guys know how you found together. Right now, you're a team working on Crypto Studio. You come from very different sides of the entrepreneurial spectrum. So maybe that would be also an interesting treat.
Yeah, I think Tim summarized it very well. What we try to do and what we try to achieve. And what I can say, because I come very much from the traditional finance side. I've had a traditional finance career, like done it all: investment banking, consulting, real estate, and that kind of stuff. And from my point of view, when I look at crypto today, I absolutely agree with Tim that crypto lending is going to be the next killer application of the crypto space, in particular combined with stablecoins, because that's like saving money and earning interest is something that's very familiar to a lot of people, whereas something like investing your money in Bitcoin or Ethereum might be a little bit difficult for people, especially when they have a traditional background, because they don't understand it. They don't want to read a white paper or these kind of things. Whereas saving money, you put it into a savings account, you earn interest, relatively straightforward. Everyone understands it. That's why we think like crypto lending is going to be the next killer application in this space. And as for your second question, how we found together, so after my sort of traditional financial industry career, I kind of ended up in fintech lending a couple of years back. When I say fintech lending, I mean not only crypto lending, but fintech lending in a broader sense. I also work on another project, which is a software provider for a digital lending software. And I find this lending space incredibly exciting, because I think the way how we do lending will significantly change over the next couple of years. So Tim and I, we know each other via a common connection. And when he approached me with that project, that's actually the first time when I really learned about crypto lending and started to understand it. And that's how I really got into that space as well by myself. And that's how I got convinced that Crypto Studio is definitely a good idea.
Yeah, maybe a few more sentences to the setup of Crypto Studio, how we found together and so on. And what is really the mission here. So on one hand, we are now 8 people. So we are like a group of like Lucas already said, like techies on one hand side, startup founders, and finance guys. And most of us are deep into crypto, but not all of us. And I think that's also quite important for us, that we are not this, bullish YouTubers who are just saying, okay, now go all in and all the stuff. So we also balance out each other, and that's quite important. And we are convinced to go in this mission together, because we see it as an opportunity, right? And not just as an opportunity for us. For me, I can say, I already did some startups before, right? And it's not necessary for me to do another startup at all. Yeah. But I also try to help my friends to see the opportunity in crypto, and I'm telling them since years that it might be interesting to take a look at it. And same was for crypto lending. I'm into crypto lending since I think 2019, and I was teaching my friends about it. Of course, they were asking me, and they were basically all the time asking the same questions, right? And I'm also answering the same because from a newbie standpoint, you basically always have the same questions, right? And I would say I'm more like I would say maybe crypto lending expert because I'm doing it since quite some time, and also in an intense way, I would say. And so I was starting to make my own research in the topic. I tried to build some tools, time to have some controlling tools, or to get the newest rate automatically, and so on. So basically, I was building Crypto Studio just for myself, but without any front end. Yeah, so there was no logo, there was no educational content, which is there for other people. But basically, I was checking all the information for myself because I want to know them, and I also wanted to know, okay, what is the advantages of DeFi? What is the advantages of CeFi there? What is about the different players? Which is where, and so on. And at the end, as I was kind of getting all the answers and so. And I was still teaching them to some friends who were asking, what is with crypto lending and so on. And then I was kind of tired to always say the same things.
So you create a website, go there.
So I created a website because I know basically how to do it, and giving this information to my friends. And of course, I was also finding some other people who are also into this way, so we could unite the ways. And of course, it's much better if you share this information with other people, and also create better tools as I would create them if it's just for me, right? And at the end, the most important thing is that we believe that the blockchain technology enables the financial opportunity, right? And at the end, maybe even financial sovereignty for everyone. And the great thing and the difference between startups is that it's an inclusive market and everybody can participate in. And it's not like in the Berlin startup world, that if you are the founder or the investor and so on, you get something. If you exit the company, basically
open to anyone, right? That's the appeal of the whole space.
At the end, we hurt ourselves the most if more and more people discover this opportunity, and if there's another zero at the Bitcoin price, whenever it is, that's the best payment you can have, right? And you can help other people as well. So this is a very interesting dynamic you normally do not find in other markets.
One quick question before we move on to Era's question is, because interesting, did I understand correctly that you have somebody who is not into crypto at all on your team?
Yes, and as Lucas said, he was not that into. I mean, he knew about this, but he was not in crypto at all. And of course now it changed. But there was also other people who have heard of it and so on, but were not invested. Yeah, that's true. Yeah.
Great. I think it's fantastic to have also to have a team not only built of crypto evangelists, right? Kudos to Crypto Studio for a diverse team in that sense. So please, Era, I stop talking.
Right.
It's your turn.
Thank you, Mario. So it's quite also interesting that how it started was your curiosity, and then everything revolved around that. But first of all, we talked about a lot of lending and the finance. And so that's why for the listeners who are not aware yet, I would want to ask what is lending and who are the players involved? And actually, how does it work in a basic terms? Just a brief introduction to that about the lending. What are we talking about actually when we say lending?
Yeah, maybe I'll just give you a quick definition, and then, like in a nutshell, and then later on we can touch on the details. So I think from a macro perspective, crypto lending is really just redistributing liquidity in the crypto ecosystem. So on the one hand, you have people who have liquidity and don't need it, and on the other hand, you have people who have no liquidity but need it. So crypto lending does it is allows people who have liquidity in the form of crypto assets to rent out these assets and earn an interest on it. And on the other hand, you have people who need liquidity and they can borrow crypto assets and pay an interest on it. Now, in the middle of all of this, you have so-called crypto lending platforms who facilitate that transaction. So they manage a capital pool. You as a lender, you pay in that, you get an interest, and the borrower can borrow from that capital pool and pay an interest. What is very important to understand is the term over-collateralization. That means whenever someone borrows from that capital pool, they get a loan and they have to put back collateral, which is worth more than the loan that they take out, right? So if the lending platform does their job right, then there should be no credit risk involved and the deposits of the lenders should be safe. So this is in a nutshell how it works. Of course, there's details to it, but I think we can talk about that more.
Just in a quick in between, how much like what are the can I decide as if I lend crypto to someone? Can I decide? Is it a free market? Can I decide the interest rates?
You can't decide the interest rates. You have to go with the rates that come from the respective lending platform. But you can of course choose which lending platform you want to go to. You can choose in which currency you want to save. And lending platforms also typically offer you different ways how you can earn a higher yield. That's something we call, there's a difference between a base rate and a max rate. So the base rate is sort of the lowest rate you can get, and a max rate is a rate you can get when you meet certain platform-specific requirements. So you can't decide on your interest rate, but you can do a lot of things to influence that interest rate.
Thanks.
Yes, and there's also a big difference, if you talk about decentralized or centralized lending platforms. And
that
of
would
course,
be my question. Thank you so much.
Yeah.
Also, because as Lucas was explaining, thank you for saying, because the thing is one of the questions pops out. I guess there are two platforms. There are modern platforms, like decentralized and centralized. I was just gonna ask you guys about that too. But thank you so much for starting. Actually, I did not mean to interrupt or anything. Please continue.
Yes, I mean, also, we see it from. It's not so easy to say, because it's easy to say that decentralized is always the best, right? But I'm very, very careful with this kind of statements, especially if you take a look at the people who are new in the space, right? And not everybody can handle all those technical issues and security issues which are necessary to feel safe with decentralized platform. And the same is happening in the lending space. And so there's room for both things. And there's even decentralized lending platforms who are now starting new things, like Mario was asking if you can choose your own interest rates and so on. So normally the answer is no, but now it's even starting that you can choose your own interest rates, and you can even start to rent out some NFTs and so on. But these are totally new developments in this lending space, right? Because it's quite evolving. But the main platforms in this place, like Aave, BlockFi, also Cake, DeFi, Aave, they offer totally different opportunities. And this was also one of the reasons why we have such a detailed review about the different platforms on our website, because there's no like winner where you can say, okay, let's all go to Celsius or let's all go to cake or whatever, because everyone has an advantage or disadvantage, and maybe also different risk profile, or also different countries where it operates from. So I guess there's something for everyone who's interested, but I would definitely not say that CeFi is better than DeFi or this topic. So it's quite complicated, I would say.
Yeah, I think it also depends a lot on the user, right? Because I mean, maybe not even everyone in the audience knows the difference. So maybe let's just very quickly define that. So when you give your money to a decentralized finance platform, basically you're trusting in a protocol. When you give your money to a centralized platform, you trust a private company with your money. So that's a completely different concept. And I think that at least today, most people, and especially people who haven't yet had any touch points with the crypto ecosystem, I think for most of those people, it's much better to go with a centralized platform, because with DeFi, there's no customer service and these kind of things. Regulations are very unclear. So with CeFi platforms, that's much closer to what people already know from traditional finance, where they can talk to customer service, and if they have a problem, there's some human being who they can actually talk to. So I think for most newbies, CeFi is probably the way to go, and then sort of build up knowledge, and then at a later stage, maybe they want to venture out into DeFi. Yeah.
Okay.
Yeah, that's also pretty interesting, and then good information to also make a difference between them when you also first start.
Yeah, I think exactly. I think many people don't even know the difference, and this is one of the reasons why we came up with an independent comparison and knowledge hub, because I think the education is still key at that stage, because that whole space is so early stage that even the basics are not clear to many people.
Mm-hmm. That's right.
Okay. As we have now like a kind of a ground understanding of the space and what does it mean, like a lot, maybe one question already in between from the audience is, since it fits very well, how is it possible that crypto lending platforms offer such high interest rates at all? Because it's very unusual. If I tell my friends about it, right, they're like almost in disbelief. It's like, okay, that's not possible. This must be, this must be some kind of a scam, or I don't know. Yeah. So how?
Yeah. So I think the first thing that people need to understand is that the cost of capital in a crypto ecosystem is completely different from the cost of capital in traditional finance. Take crypto lending. These loans, like most of these loans, go to institutionals. Right, so I don't know, crypto miners or crypto exchanges, market makers, and these kind of institutional companies. So if they want to get a loan from a bank, they couldn't really get a loan, because most banks just write out blacklist crypto companies. They don't even give them loans. So they have no access to the traditional financial system, and that is one reason why the cost of capital in crypto is higher than in traditional finance. And another thing is that the crypto market is actually functioning much more like a capitalist market in a sense than in traditional finance, because the rates are dictated by supply and demand. Whereas in traditional finance, you have a central bank who basically controls the liquidity and manipulates the rates. I don't mean it in a negative sense. There's good sides to that as well, that we have these mechanisms. But that's what's happening, right? So maybe the right question to ask is not, why are the rates in crypto so high? Maybe the right question to ask is, why are the rates in traditional finance so low? And also you have to see that crypto is a global market, right? So this is not like limited to Europe or to the US. And I guess most of our viewers are probably somewhere from the West, from Europe or from the US. And we have, globally speaking, very low interest rates. If you go to Asia or Africa, double-digit interest rates are really the standard. It's nothing unusual. Yeah. Considering it's a global market, rates are actually not that high.
Understood. Thanks a lot for this, for the perspective, right? Because we're just so used to not having any interest at best, sometimes negative interest. So
you go back.
Yes.
You go back 20, 30 years in time, and you would have had very similar interest rates in the West as well, like 5-6% in savings account.
Yeah. Okay. Now, since it's very interesting, we get caught up in interesting discussions. But I also would like to show our audience your page, your portal, if you just want to give a brief introduction, overview, and show them. That would be much appreciated.
Sure. I share maybe two screens because we were touching the interest rates. So maybe this is the most this is the page which makes the most sense, because you see here basically a table of different interest rates and different platforms. You can see here BlockFi, Celsius, Nexo, Cake, Crypto.com, and Aave. That's the platforms we started with, and of course we will add much more. We will also add more and more coins. You can go through here to the different coins. You see that not all coins are on all platforms and so on. And like Lucas already mentioned, we have different rates. We distinguish between basic rates and maximum rates. And maximum rates, of course, they depend on lots of things. For instance, if you have their native token, or if you stake for a longer, if you put your money in there for a longer period of time and so on. Of course, it's quite different if you get here 8% or if you get 4%. But as always, the devil lies in the details, right? And you can. And it's even not so obvious how you can get sometimes the high interest rates. We're also in contact with these lending platforms to really explain our users how is it possible. So you can now click on a detailed page. You find all this important information we already have digged out, and of course we continue to add all the informations. And here, for instance, you see how what criteria are necessary to get the high interest rates with Nexo, right? And so you can go into the details of each player. And here is a Crypto Studio check. Maybe Lucas, you say a bit about it, because you are even more into it than me, because he's our head of this check, even though we did it together, but maybe it even makes more sense. These are the different criteria, because it's a quite complicated process. It's not just that we put there 5 stars or 4 stars and we're rolling a dice. So we really put
it's absolutely helpful for at least if I think my journey in this space, and I've been in for a while. I'm one of the platforms I'm on is actually Nexo, and I quite like. But having had a check like this beforehand would have helped me a lot, which I didn't have, and it didn't exist then. But yes, I can see the benefit from personal experience.
Maybe I'll just jump in there and explain a little bit what we actually try to do here. So we looked at the leading, or in our view, the leading 6 platforms at the moment, and we compared them according to different criteria. We looked at all of their 138 different crypto savings accounts in detail and analyzed that. And then we came up with this Crypto Studio check. So basically, if you are looking for a crypto lending platform and you're not sure which one you should go with, that's your starting point to do your research. So we looked at each player according to 6 different categories. This is what Tim just showed you there with the Crypto Studio check. We looked at their savings accounts, their crypto loans, their security, there you have it. Yeah, the user experience and the business review. So here you can see those 5 categories, and then we gave them a score within each of these categories. So within each category, we defined sub-criteria. You can see that here, for example, for business review, we looked at how's the company financed, who's the CEO, how many assets they have under management, how many users, etc. And then we gave them a score for each of those criteria. We also weighted those scores because not everything is of the same importance, right? Like, for example, it's probably more important for most of our users what interest rate they get as compared to what kind of lockup periods the platform offers, right? So we gave them a score, we weighted those scores, and then we came up with a sub-score for each of those 5 criteria, and then with a total score for the overall lending platform. So I think what you see here, I don't want to tap myself on the back, right? But I think this is really like the most comprehensive research you can find on the internet about Crypto Studio. Of course, there are other platforms out there who make comparisons and things, but most of them really are sort of affiliate platforms, like a project they've put together over the weekend or within a week or so. Whereas this is really detailed analysis. We did this over months. We looked at the fine details. We spoke with each of those players. So I think this is really a good starting point. And also important to know is that we developed this also together with our community. So we regularly get feedback from our community and suggestions, what other criteria we should look at.
Okay, I have one. It's right in the questions section. And that is, are there no products for Cardano/ADA?
So we will check. So let's go there. So crypto lending interest. So where is ADA? So ADA. Oh, it is. Surprise, surprise. So Celsius and Nexo. So Celsius is offering you 4%. And if you are platinum member in Celsius, you get 5%. And to be a platinum member, to make just an example for Celsius, I think you have to have, I think it's 15% of your assets have to be in Celsius in the wallet. It might have changed already, but just to give you an idea, what you have to do to get the higher interest rates. And it's also even paid out in Celsius. It's not paid out in ADA. So if you say, I give you ADA and I would like to have ADA back, you have to have to be satisfied with the 4.1%. Yes.
Yeah, that's same for Nexo. From my experience, I have my ADA on Nexo. I have the platinum member, 10% of your total assets should be in the Nexo token, right? And that's kind of how it works. So it's a great example, a concrete one. Maybe since we are moving forward, and it's all great, and I think we get the appeal of earning actually interest and quite a good interest as such. But what do you see as the major challenges in the lending space, right? Because we get kind of the opportunity part, but what are the challenges and risks attached to the space?
Yeah, do you mean risks for the lender, right? Like people who want to put in their money and earn a yield.
Both sides. I mean, you kind of have a holistic. I can be both, right? I can be a lender. I can be borrower.
Yeah. So there's several things you have to consider, right? I mean, I've already explained a bit how this over collateralization thing works. So that takes out a lot of risk, but you still have to consider that you give your money to, if it's a C5 provider, you give your money to a private company. And like how it is in capitalism, right? This company can go bankrupt. And here's the major difference to traditional finance. If you give your money to a bank and it goes bankrupt, if it's in a properly regulated jurisdiction, then the state would jump in. Usually there's a deposit insurance scheme, or the central bank would act as a lender of last resort and then bail out that bank. And that means they basically bail out you as a lender. Or as a depositor, whereas in crypto, there's no such thing, right? So there's no deposit insurance, anything like that. So if the company goes bust, then you are in a long queue of creditors and you have to try to get some money out of the insolvency mess, which is, you're probably not going to get your money back.
One quick question, because one of the things that they advertise, at least and on Nexo, is a custodial kind of insurance up to 300 and something million. What does that mean? How safe can I feel with something like that? Is it more marketing, or is it, real? What happens actually when shit hits the fan?
Yeah, it's not only marketing, because these insurance policies, they are important, but they insure things like theft if there's a hack or something like that. This is in no way comparable to deposit insurance. So if the company goes bankrupt, you're not going to get anything out of this insurance. This is really for a hack or something like that. But even here, if it's a major hack, if they insure like a couple of 100 million, and company like Celsius is like 25 billion asset under management, then that insurance is not going to save you. So there's a place for these insurance policies, but I also would say that a lot of it is also marketing. So it's more perceived security really than actual security. But it's a great question. So going back to insolvency, that's something you have to see with CeFi providers, and this is really the major reason why in our comparison we have put in this business review section, because here we basically talk about how healthy is that business, how is it financed, who's the management, how big is it, etc. So that's something very important. Then if you put your money into a DeFi platform, you don't really have an insolvency risk because there's no private company that can go bankrupt. Here you have more technical risks, like smart contract risks, basically. Like, is the smart contract safe? Is it developed well? Are there any security hacks possible or not? And this ties back to what I said before. It's probably better for most people to start with CeFi, because in order to assess whether or not a DeFi platform is actually safe, you need to be able to know whether the smart contract is safe. And I think for most people, including myself, that's something that's absolutely impossible to know. So you would have to trust the developing community that they did their job right. Okay, now you can say with CeFi, you have to trust the company that they did their job right. Anyway, you have to trust some human beings, right? So there's that. Then moving on, another risk that you have to take into account is custody. So how are your assets stored? We look at that in our security section in the Crypto Studio check. So make sure that when you do your due diligence that you look into that, because there's also big differences. We like it when a CeFi lending platform works with a reputable custodian like BitGo or something like that. Again, if you do DeFi, then they don't custody. There's no custody. You're responsible for your custody yourself. So if you can do that, if you know how to use a hardware wallet and that stuff, fine. If you don't know that, again, CeFi might be better. Then another thing is legal certainty, right? There's still certain things that are not yet clear about that space. That's why it might
maybe
be better.
cutting in here, maybe with because like one of the major developments in the whole crypto space, but also specifically to DeFi and probably also CeFi, is kind of the regulatory environment, globally, like in what is what is this risk attached here, and how imminent is that? What are current developments?
I think so. I think when it comes to these legal risks, it's definitely good if you go with a company that is located somewhere in a jurisdiction with a proper legal framework. So something like in Europe, somewhere in the US, or in a country like Singapore or something like that, not some offshore location where you have no idea what's going to happen tomorrow, right? And this is also something we look at in our crypto lending review, like in the business review section, like where are these companies located? I don't think there's a humongous legal risk in terms of, like, for example, if you follow these discussions in the US where the SEC talks about whether or not they want to classify crypto lending as security or stable coins and these kind of things. I don't think there's a massive legal risk in terms of that you could lose money or that they will shut down these crypto lending companies tomorrow. And even if they would do that, then you would just get your money back and that's it. I think the risk is more that they will tighten the regulations, and that is going to make it more difficult and more costly for crypto lending platforms to provide the high yield. Because you have to see, we had that question before, where's the high yield coming from? Part of that is also regulatory arbitrage. Like banks have much higher costs. For example, they have to underwrite every loan with equity and stuff like that. Crypto lending platforms don't have to do that. So I would say the highest risk that you have with all these regulatory developments is that your yield is actually going to decrease, because the regulatory costs and the compliance costs for crypto lending platforms could theoretically increase in the future.
Okay. Thanks
maybe
for
another thought to it.
Please.
Is besides the things Lucas just mentioned, is like the tax, right? Tax is really important. I mean, we have seen it in the discussion in Germany, where now after some years it's clear that you have to pay basically tax, or you lose your status of cryptocurrency if you use them for lending, right? If you're a private person. If you're a professional company, it's totally different, right? And of course, if you thought it's a one way, and then everything is changing, and of course, then it's basically your personal tax. Yeah, that's a big issue. So this is always connected to regulations, and you see that the regulation can change from one day basically to another. Like now we have seen in Germany, like we have seen in Austria, which is basically having something similar to Germany, but now changing it, which is on one hand good, but on the other hand very bad. And I would definitely recommend to have a good eye on the tax laws, and if you have some money in it, to even spend the money, because at the end so maybe it doesn't really matter if you get 5% or 5.5% or 6% if you don't do your homework on the tax side, right? Because I guess there's a lot of potential there.
Yeah, do the big stones first, and then the small adjustments and the pebbles. Okay, thanks a lot, Tim, for the addition. Coming soon to a close of our session already. We could probably talk for hours more, and there's many more questions that came up. Still, also encouragement to the audience: if you still have a question, now's the time to shoot. Other than that, I would be interested, since we're talking also for newcomers, and you have a lot of experience. What would you say are the major pitfalls to avoid when coming as a newbie? Right?
Yeah, I think one thing is, if you come in as a newbie, you're probably looking at this very similar to bank savings, like putting your money in and getting an interest out. And there's still a volatility risk, but you can reduce that, even erase it. So first it depends on what currency are you actually saving, right? Like if you save Bitcoin, you get an interest on Bitcoin. Of course, you have a volatility risk because Bitcoin can change in value, but you can just put in StableCoins and you have no volatility risk anymore, and you even get a higher rate than you get with Bitcoin, because most lending platforms will pay higher rates on stablecoins. And then another thing is, we had the difference between base rate and max rates before. Now here the volatility can also get you, because if you choose to get paid out not in stablecoins but in the native platform token, for example in Cell token or in Nexo token, then there's also high volatility in that token. So the value of your interest can actually fluctuate quite a lot. So I think, to answer your question, for newbies who come into the space, don't only look at how can I maximize my yield, look at also how much risk do I actually want to take. And sort of the low risk variant would be just put in stable coins and choose to earn your interest in stable coins. And then you have no volatility risk. Then you have only the platform risk. And that you can again minimize by going with an established provider. So that's where Crypto Studio is your first place to go.
Okay,
and I would also add something here.
Or so.
Yeah.
Oh, okay. Please, then I will ask my question later. Yes, that's a newbie question. So please go on first.
I just would definitely recommend to go with different platforms from the beginning, right? That you split whatever you want to put in on various platforms. So this gives you on one side better risk, and on the other side, you have much more experience, and you can see what platform offers what kind of products and opportunities, because on the opportunity side, there's a big difference between the different platforms as well. So there are basically two reasons to go with more than one platform.
Absolutely, and if you do that, just add this one as well. If you do that, you even can earn a higher rate, because many platforms, they will offer you teaser rates.
Yeah.
So for example, in BlockFi, you get a higher yield on the first, I don't know exactly, 0.1 Bitcoin or something like that. So by spreading your wealth over different platforms, you're not only risk diversifying, you're also getting a high yield, because you can make use of those teaser rates.
Okay, so my question would be, as a newbie, just a quick question then for also maybe the crowd too, because Lucas, when you were explaining, you started the sentence with like, for the newbies, they would think like they're lending from a bank mindset, right? So what are the prerequisites that I need to have have as a criteria when I do get into lending, or nothing at all? Like versus tradition.
Yeah, really nothing at all. Like, I mean, you need to. I mean, okay, you need to go through a KYC with a platform. So you need to show an ID and stuff like that. It's like the typical thing you have to do when you KYC with these platforms. Not if you go DeFi. There's no KYC with DeFi. But other than that, there's not really any criteria. So even if you want to borrow, right? I mean, this is a major thing on the borrowing side, because there's no credit checks or anything like that. Like with a bank, where it's really like painful to get a loan for many people, especially if they don't have any bankable assets or anything like that. With crypto, it's really very straightforward. All you need to do is you provide your collateral, and then you can get a loan. So there's not really any major criteria that you have to meet. Yeah.
Except for the research decently, I understand.
Absolutely,
right.
Yeah.
And then I would want to ask also, where do you see the lending in 5 years for both of you? But maybe first we can start with Lucas.
Okay. You mean crypto lending, right? Or you mean the lending space in general?
Right.
Crypto lending. Yeah.
We can do crypto lending. Yes.
Okay. Yeah. So I think it's going to grow massively, because it has already grown a lot. Like if you see like 2 years ago, that was really like small, and now you have big players like Celsius with more than 25 billion under management, or even the CeFi platforms like Aave, they have like 25 billion under management. So those are like, I mean, put that in perspective, right? That would put Celsius already in like the top 200 banks in the world. So that's quite big, right? And so I think this, especially both the CeFi and the DeFi space, will keep growing. I think in the next couple of years, we will still see that people are predominantly going to DeFi players. So you will have more players, and then you will have some disappear and others grow more. But I think in the long term, I can't say if that's 5 years, 10 years, 20 years out. I think in the long term, the lending space will transform into this decentralized lending space, where you don't even have these CeFi players anymore, and everything will be completely automated. But that's a long way out. So for the next 5 years, I would believe that probably CeFi lending will be the big thing.
Thank you, Tim.
Yeah, so I'm definitely sure that crypto lending will be much bigger than it is right now. I mean, I all the guys who I got in the projects, I told them 2 years ago that crypto lending will be a big thing, and if you compare it to normal financial industry, you see that lending is a very big thing, and even bigger than exchanges are. And in the crypto space, lending was almost not existing, and exchanges were the big thing, right? So it was quite easy to see, I would say, that this will be the case, and it will be much bigger, because lending is a base basically for all financial markets. And of course, it will there will be evolutions. There will be probably it will be possible that you even lend out your NFTs, for instance, which are of course totally different, because I mean, the fungibility or non-fungibility in this case, right? So this will be definitely interesting to see how this is working, and of course it will be very interesting to see who are the players, if even traditional banks will offer crypto lending as well, right? I could definitely imagine that this will be happening because there's lots of trust in the banks, and if the banks are willing to do it, I think they would have a big chance to have a big part of the market. And of course, it will be interesting to see how the rates will behave. I would guess that the rates will go down long term, and it is they're maybe as high as they are now, maybe because, as Lucas already mentioned, it's a market where lots of players are unbankable and so on. And if this is more inclusive from the institutional sides, it probably will go long term down with the rates. But let's see what's happening there.
Maybe adding one more thought.
Aspect.
Adding one more thought and making it a bit broader, because I think this is really exciting. It's not only the crypto lending space that's growing, right? It's the overall crypto space is growing. And another thing we see is that more and more assets are going to get tokenized. So what I think was going to happen, I'm not sure the next 5 years, the next 10 years, but I think what's going to happen is that eventually you will see that crypto lending and sort of the real economy are going to get interconnected. Let's, for example, say, today you can already tokenize all kinds of stocks. You can tokenize real estate. Let's say you could tokenize a house. So let's say in future you don't have your housing contract on paper anymore. You just have a token of your own house where you have your property rights and all of that ingrained in that token. And then what you could do is you could just take the token of your own house equity, and put that on a crypto lending platform and get sort of a mortgage loan against your own house on a crypto lending platform within just a fraction of a second, as compared to what it takes to get a mortgage today from a bank, right? Like, which is like a huge thing. Yeah. So this is where I think the whole thing is going to start get really exciting as the whole economy gets tokenized. Crypto lending is going to have a key infrastructure function in that tokenized economy.
So sky is the limit, right? Everything is possible.
Absolutely, yeah. And I mean, it's also if you go into the developing world, right? Like where Tim said that, like, a lot of people are unbanked. Like, I mean, I traveled a lot in South America, Asia, or something, where people, for example, sit on land, but they don't have a title to that land because it is so painful to register it. Let's say if that would all be digital, and you could just pledge your token somewhere in a lending platform and then get a loan for that, you have much easier access to capital, and that would then unfold a lot of economic activity because people could suddenly get access to liquidity to start a business and things like that. That would have a huge implication, I think, on the whole world.
Yes, definitely. So thank you so much for today's episode. We had a little bit over time. Sorry for the crowd for that, but definitely we can talk hours long on this issue. Very interesting. Thank you so much, Tim, for joining. Thank you so much, Lucas, for joining today.
Thanks.
That has been a great episode. As always, you know, episodes are recorded, so for you to rewatch or share with family and friends and write down, you can click on there to stay tuned for the upcoming episodes. You know, guys, like bi-weekly, we have our crowdcast. So that was for today. Anything to add from your side, Mario, guys? Other than that, that has been a great
just
episode.
Very happy to have had you guys on board, and looking forward to deepening the discussion soon in person, maybe. But yes, thanks a lot for joining.
Same.
And I guess have a nice afternoon / evening.
Right.
Thank you.
Thanks for the opportunity.